All right. There we go. Unmuted everywhere. Good morning, everybody. Hope you're having yourselves a fantastic start to your AM here. Happy Thursday and happy day 179 of just boring, slow, exhausting consolidation, right? We've had again another relatively choppy week here a little bit, and it's not been supported by like the strongest of kind of price action narratives here, or yeah, just getting any consistency. We are seemingly still getting a lot of those like mid-morning reversals, or like Trump opens his mouth and markets kind of sell off, 100 points. I'm literally like still battle scarred, I guess, of closing here 3 seconds right before the mega dump there yesterday. Obviously that was a very, very dramatic type of trading, and as uh rewarding, I guess it was, right, for us to identify a close before that big reversal happens. It's also like a little bit of a telltale sign, right, that markets really aren't super healthy, and they're kind of just like maybe not healthy is not maybe healthy is not the right adjective here. Markets kind of remind me a little bit of um like and sorry, I don't know why my brain went here, but like after like Thanksgiving or Christmas, or like a big holiday, and you've just like stuffed yourself silly, and you're sitting there on the couch, and like you just like don't know what your next move is going to be. You're pretty much just wanting to like sit there and please, like, may the football game be good, right? um it almost feels like markets are a little bit like that, where they've kind of stuffed themselves silly a little bit here in kind of like a weird weird grind up. Like the move here to the upside pretty much across the board has almost been again, sorry, food analogies here across the board today, but it's almost like the market has like eaten up all the Costco samples, right? Like everything's just been kind of like small little nibbles here and there, and all of a sudden, it's been a pretty tremendous type move. So yeah, it does just feel a little bit like it's waiting for something. It's sitting there. It's maybe a little bit full, and I would like to really see a clear and consistent narrative kind of shape up. The other element that price action is kind of reminding me of here a little bit is it's reminding me a little bit of how I felt I was probably trading like in early June, where there was no clear direction, and it was almost like a scenario where if you take enough shots, eventually you're going to find one that wins, and then you can build up your position sizing and get paid out huge. um that belief, or like that statement, right, is kind of a limiting belief, actually, right, where I'm not eventually always going to get it right. I think is really the the important thing, right, to realize. And I don't want to reward those types of trading environments that encourage that type of feeling, or like that type of stress. So, really, really trying to focus here today on being really deliberate with my decision making, right? And potentially even slowing down here just a little bit, because the market's not giving me any reason to be hyper aggressive. And without that sort of high conviction backdrop, or that real indication that me committing a tremendous amount of mental capital is actually going to be rewarded, then I need to be like really cautious in protecting that to make sure that I am in a good position. I do think that yesterday, by the kind of like end of our trading day, maybe not the end of the stream, but by the end of my trading day there, I definitely felt a little bit exhausted. And I don't think that it was a particularly easy trading day, but it was also a session where I made it more difficult for myself because I took so many trades in choppy markets, right? Which again, it just exaggerates, yeah, some of those like mental pitfalls, right? So I know it's kind of a little bit all over the place here this morning, but really the things that stick out to me, right, is the choppy market. So there's no reason to be hyper aggressive until we get a clean narrative in either direction, right? Basically resolve this in decision. The other yeah, like the other element, right, is price action feels like a little bit lazy, or it feels a little bit like stuck on the sidelines or sitting on the couch. And I need to get a indication of like a different trading personality where at the very least I could trade more like consistent range bound conditions. Basically, price action right now is only moving when it's getting yelled at by Trump or Powell or some sort of market commentator, and getting it away from that narrative driven to like basically price action driven, right, would at least allow us to trade those range bound moves a little bit easier and then give us that momentum. And then the final element, right, is just understanding my own personal limitations. These types of conditions kind of, yeah, they do sort of want to bring out in me the like I'll trade until I'm happy type situation. And so just protecting myself from that, being more proactive, not reactive, and really making decisions based on protecting mental capital are going to be the key elements here this morning. All right. That being said, let's start mapping things out here, Mike. Good morning. Welcome back. Great to see you in here, man. We're all thinking of you. And yeah, hopefully we can have ourselves a good trading day. So first things first here, right? Economic calendar for the 17th. Okay. Retail sales fine, nothing too crazy. Nat gas storage shouldn't be an issue. Maybe the housing indexes could be something here today at 10 a.m. to give us a little bit of a possible trigger. We've got some more Fed speak here, but that's not going to be till later in the afternoon. We should be okay from an economic calendar perspective. Again, it's going to be one of those things. If Trump starts yapping or he starts tweeting, maybe the market's going to react to that. But all right, we got 5 minutes here, so let's fire through. Yes, what's the count here today? What's the count here? I was going to say to the downside, but it's not to the downside. What are we calling this? Right, 3 for 3 here to the upside. Increasing outlier volume, right? Kind of the biggest volume we've seen in the last little bit here. So let's see if we can get that resolution here or that breakout. Arguably the largest volume of the last month or so. And so yeah, we'd like to see it get back towards sort of that, again, 63.20. Man, I don't have to change any of these levels all week. And because it's outlier volume, right, I do think that makes it a little bit more difficult for me to have a bearish bias. It just sticks out like a sore thumb, right? It's much more challenging for me to say that it's a two-way tape when it's the strongest bullish volume of the month. Okay, NQ, how do we feel? Similar, not so similar? Again, similar thing with the volume profile, right? Largest of the month there yesterday. Didn't feel like that, right? Didn't feel like yesterday. But same thing, right? 3 for 3 here to the upside. Largest volume of the month, targeting 23,200 right at our initial level, and then all-time highs and beyond past that. 2 back-to-back days, rate of increasing outlier volume. I'm going to go NA to the downside. I also think that, again, I'm being a little bit maybe selfish here, but forcing myself to limit basically the amount of trades I can take directionally and almost like box in my thesis here this morning. I think it should be a nice way of protecting my mental capital. Now, that's like a benefit. It's not by design, right? My system here is telling me 3 for 3. So I'm being told it's trending price action higher. It's strong trending price action. And then when I'm objectively looking at this information, it's on paper, right, the strongest that we've seen in the last at least 15 trading days, 16 trading days. So the market is telling me bulls are in control. I should take that story or listen basically to the whispers of the price action and yeah, make sure that I kind of use that as like a extra way, right, of protecting myself from myself. Okay. Crude. I mean, I think I'm probably not going to trade this here today, right? We're starting or creeping up into the futures roll that kicks off there tomorrow. So I just think it's gonna be really challenging for me to trust the volume profiles. So again, I'm just gonna go NA on this until that happens. And effectively, right, what the futures role is that you have or futures is a contract, right? You're making an agreement to buy at a future date, and that date is when the contract expires and then gets switched over to the next one, right? So right now we're trading the Friday, July 18th expiration, right? Or I mean, it's not July 18th, it'd be end of July expiration. And then we're switching over to the end of August expiration. So it'll still be the same price and all this kind of stuff, but just some of the mechanics, right, of effectively trading these types of contracts. Crude rolls once a month. ES and NQ roll every quarter. Okay, Apple. Red candle, increasing volume, gap up. Kind of a weird one, right? High volume indecision. Higher high and a higher low. That's annoying. Tesla, bullish engulfing candle, bullish engulfing on volume, 3 for 3. I actually can't believe Dave Portnoy made money on this. He never makes money trading. All right, green candle, barely increasing volume, gap up. Still technically a 3 for 3, but maybe not as strong as I would like. Or at least weaker volume, right, than what we're seeing on the index level. And that maybe is a little bit of a concern. Amazon, technically a 3 for 3 here to the downside. It's gapping down. Oh no, okay, now it's going to call this a 2 out of 3 to the downside. So again, we're kind of getting probably more bearish trending price action internally than I maybe was expecting. Again, kind of held that gap there yesterday, a little fake out into it, found support, sorry, inside that range. We'd be looking for a breakout over that 172 zone. But this is a textbook 2 out of 3 here to the upside without volume. Okay. AMD. Again, same thing, 2 out of 3 to the upside without volume. Again, China news. Meta, 2 out of 3 to the downside with volume. Yeah, I don't like that. We have a bunch of names here that are kind of trending in one direction, and then a bunch of names that are kind of trending in another. Like indexes appear to be trending higher. Maybe our leading names appear to be trending lower. That probably tells me a story of indecision, right? And kind of consolidation more so than it does of any consistent continuation. Can't quite tell if that's an inside bar. I think it is. I was trying to speak and figure that out. I couldn't do that. Call that an inside bar. It's got earnings tomorrow. Oh no, today. So again, this would probably be a non-tradable anyway. And then Google Doji, decreasing volume, green candle. I mean, it would have been without volume, so it would have been gapping down. Open was under yesterday's or close. So should be okay here. Any questions, team? How's everyone feeling? Good, good. So I don't like day trade stocks really too much anymore. Basically all I'm looking for are these are like the biggest names of the index, right? Kind of on both sides. They're maybe represent maybe like 50, yeah, I would say 25 to 30%, right, of what makes up the market move, or like the weighting of the general market. So the idea here is that if I kind of see what the makeup or what the internals look like, then I can kind of start to put together a consistent narrative over what I expect price action to do. It's almost like trying to be able to see the market without any makeup on, right? I can kind of tell if it's actually looking strong or if things are looking like kind of convincing. Generally, the more inconsistent I see the leading names or sort of the stocks that we went over versus what I'm seeing on the indexes, the more likely it is for me to be able to um, uh yeah, just take advantage of either consistent narratives, right, or avoid choppy markets. Well, prop firms don't allow stock trading really anymore. They did for a little bit, Ian, and we were trading stocks at that time. But yeah, pretty much everything these days is now futures. It's futures or forex or crypto, pretty much is what prop firms offer. So pretty easy to just want to trade futures instead. Sorry, just have to get my laptop there. So kind of an indecisive open here, right? A little bit, which I think makes sense, right? The story that we saw on our leading names was one of indecision, right? Or where we saw one story higher, one story lower, one story higher, one story lower. So I think that probably indicates like it's going to be a slow start to the day. That would be my base expectation. Yeah, kind of an unenthusiastic or at least uninteresting start here so far. Honestly, it kind of feels to me um, like markets are trying to exhaust all the bulls and all the bears and all the perma bulls, all the perma bears before this move eventually kind of sorts itself out. And it's too early in the morning here for markets to test me like that. It's putting me to sleep. Yeah, they're just called volume candles. So if the volume is increasing, right, the candle should be fatter. It just allows me to visualize things here well. Okay, ES breaking out here. We need to see volume supporting this narrative. ES still kind of basing off of these lows, maybe a little bit more than I expected. I've got a decent chunk of a Palantir position I need to unload here in the next couple days. And I'm trying to get like 155 or better. I'm kind of just playing around that area a little bit here. Yes, maybe squeezing a little bit. Mhm. I'm going to wait for it to just cleanly break out through the opening range. It should happen on the 5-min. If it does, I would be theoretically interested here in ES a little bit. But if my if my concern here, and maybe this is again like maybe some self-sabotage a little bit, but if my concern is that the price action is maybe just a little bit extended, right? Or it's already like maybe a little bit choppy and then half the move has happened, I'm going to be scared that the second half is going to be slow, right? So at least on the 5-min here with NQ, I have an opportunity to get kind of a smaller chunk or like a start at the earlier point where I think it's more challenging to deal with that exhaustion, if that makes sense. Now, I might be galaxy braiding this a little bit, but I'm trying to force myself to slow down. So let's see. And this would be flirting now with very stressful. Yes, a little bit better. But again, guys, right? My base expectation is chop until proven otherwise. I would rather be a little bit later into a move, but know I'm 100% correct than be early and be trying to figure that out still. Morning, Sean. Morning, Rusty. Okay, so we'll be looking here at the 5-min time frame on NQ. Call it 119 stop loss. Reference price would be 129. So about 10 points of risk. I could potentially be looking here at 2 contracts. Let's see. Just touch that 129 and then went to 124. That was a little bit annoying. Okay, so there's that fake out potentially. Let's see. Okay, so now stop loss would be 117. An extra 2 points. And again, right, we are looking for a little pullback here once it breaks out above our confirmation candle high. Still hasn't given us that separation away from the blue line, so not ready to place an entry yet. Got to clearly break out over, right, and then pull back. All right. Now we're looking for a pullback here. Hey guys, I am in 125 on the dot. 125 on the dot. Stop loss 117. There we go. All right. A little bit of a stubborn reaction here post entry, right? A little bit stubborn. Okay, see if it can go. Push, push, push. Huh. Okay, go, go. There we go. No, don't like that little drop there. See if it closes strong. Hmm. It's a mech close. Well, just as I was saying, it turned pretty nice. And basically what we're watching for here is just make sure that it doesn't give us a little failed breakout, right? So kind of want to see this now act as our support, right? We don't really want to see this thing pull back like it is. So whatever this pullback ends up being, like, let's pretend we were using the aggressive entry technique here, right? We want to see that 131.25 act as our support. I don't know if I can explain it, but something about this is making me feel a little bit jittery. I haven't had enough coffee for it to be that. That just reminds me a little bit of the feeling I had yesterday before that quick reversal. Like something just felt a bit off. So let's see if this can keep pushing, but I'm trying to figure out if that feeling actually is logical to have or if I'm yeah, just bringing on that baggage still a little bit. So far so good on this trade though, guys. So far so good. Okay, very nice. Yeah, I feel obviously great about this. Is a great trade. Now I just want to get that next little big pop, and then I can look to get out. Because something about this still, it's making me feel a little bit weird. I don't quite know what it is. I fight through it a little bit here, but yeah, I don't have any reason to sell. But I do feel a little bit weird. Nice work, Patrick. Let's go, Jamie. Good job, team. Nothing about this tells me I need to get out. It's just, I don't know, something feels weird to me. All right, so let's see if this thing still got some legs here. Sorry if I talked you guys out of it. I'm going to be looking for an exit here pretty soon, I think. Nice, 665 win. That sounds awesome. Okay, so good candle close. It's a 3-for-3 candle, guys. I don't have a reason to close this yet. I think I can still look to squeak out a bit more. I'm gonna fighting something on this. The fake out bothers me though. Nice work, Greg. Nice work, Eric. Again, kind of a tough one because I got to trust the candle there a little bit, but it's not bouncing back as aggressively as I would have hoped. Nice work, Pat. Got stuck there at that 150 on that pullback attempt. Yeah, he's going to get over 150. Nice work, Kiki. Yeah, so let's see if this now rewards us for surviving a worst case scenario. Weird, that actually made me feel calmer. Like the thing that I was scared of kind of happened. And it wasn't as bad as I thought it was going to be. Now, I say that out loud, that made me feel worse again. Yeah, white line's going to be the 2R range, which is 23,22275. I mean, I'd be surprised if we get there right now. The way that it's moving, that's a big ask. Okay, see if it's got the legs here. Come on, baby. The bounces off of 150 keep getting smaller and smaller. Come on, push. Trying to give it as much time as I possibly can. The other concern, I guess, a little bit is we got data dropping in 40 seconds. Nice work, Kiki. Quick morning, go back to bed, enjoy your life. Sounds great. Okay, see if we can explode here. Come on. Come on. There it goes. Let's go. All right, so keep popping here. Hey, Todd, that's a great first trade, man. Nice work. All right, guys, this is starting to run for us here very nicely. Hopefully, a few of you are still in this here with me. And yeah, we're going to start looking to get out of this pretty soon. We can get a couple more points. Like 5 more points here. Come on. We're close. We're so close. I have a song in my head, like an 80s song. It's called Big in Japan. I don't know why it's stuck in my head here this morning, but it is ringing out loud here. All right, let's see if we can get this close. Push, push, push. A few more points. Nice work. Okay, I start thinking here a little bit more. There it goes. All right. Mama, there goes that man. Let's go, Jared. Nice work. Better entry than me, and so far, better exit than me. That's fantastic. Hey, give me one more decent little squeeze here. I get like 175 or better. Maybe like 176. Come on, give me that new high. Again, we don't want to see this really cracking as support here now. I mean, it hasn't made a higher high yet, so theoretically this should be it. But I don't want to. I don't want to deal with a pullback to 148. I'll be out way before that. Come on. Okay, it does feel a little bit like it's starting to stall here. And maybe my profit target's a little bit too P&L based. Nice work. 172 is an awesome exit. Okay, this will be my Alamo now. 156.50. And again, right, this trade is rewarding not panicking here, right? Not making any panic closes. It's funny, it's kind of one of those situations where, like, yeah, I felt a little bit like jittery, like I said on this trade. Especially when I first entered, and pretty much every reaction, right, or every impulse I've had since then has been to close or to get out, but there's nothing from a technical reason that is telling me I need to get out, right? And if that's the case, I need to continue to trust my price action and to trust my thesis and basically do the opposite of what my emotions are telling me to do in this situation. Hopefully I get rewarded for it. We've survived like two worst case scenarios that have pretty much felt exactly the same. Well, this is an increasing high. This is an increasing high. So as long as this candle hasn't failed, that's fine, right? That's still reasonable. It's not always going to move up in a constant straight line with increasing outlier volume. And the more separation I have, right, away from my entry price, the more I don't want to say flexible I can be with my thesis, but the more time I can give it, right? So like if my trade isn't telling me that it's weak and I'm seeing weak bears fail in their attempts to reclaim control, there's nothing there that tells me I need to be like fundamentally scared of that price action. Now, just the biggest concern here, more than anything, right, is now that the move has effectively happened for the day, right? So, like, just to break this down here quickly, right? This was my post entry candle, right? This is as strong as it can go. The next candle there, right, is lowest volume of the day, least bearish candle. So that's for sure telling me weak bears. Then when we break out back up and over, we're getting increasing outlier volume, larger volume than we saw there previously. So everything I'm being sold here is a narrative that bulls are in control and bears keep failing in their attempts to reclaim it. Now, that doesn't mean that this couldn't have been the final pop of the day. Absolutely could have been, which is what I'm trying to figure out here a little bit. But again, I've got time to make this decision, so I don't need to panic close or panic buy or do anything. I can be patient. Okay, so gotta be careful here. Okay, give me an uptick here to get out on. Come on. Again, right? It's just not panicking to those moves. Yeah, that didn't feel great. High of my confirmation candle if I'm using the aggressive entry technique. So this was my entry technique, right? Reference price was high of my confirmation candle. So this was my confirmation. Use the aggressive entry. We want to be looking for this 128.50 to act as support. Right, so it's the same thing every time. That shouldn't be a surprise, right? We're looking for a bounce off of the previous high to act as our support for our continuation higher. And then all I'm doing is trying to get a discount relative to that price, right? Relative to that high. Sorry, which context here, Ghost? Previous high, which context? Post entry or pre entry? Well, yeah, that's what the 3-for-3 candle rule is after, right? We're looking for three things to happen. We're looking for increasing volume, we're looking to hold higher highs, and we're looking for a strong candle shape. I need two out of those three things to continue to hold my trade. Again, right? Same thing every single time. A lot of videos on that in the Discord. Come on. From the reference price. And then I'm trying to buy a discount relative to that. Not quite sure how else I could be more clear with that. The 236 fib line, all it does or all it shows me is where my risk reward is appropriate. That's it, right? Doesn't give me any other information. It just helps me visualize my risk reward ratios. Jesus, guys. Okay, keep going here. Keep going. Done a pretty good job surviving. Now I just want to be rewarded for it. Maybe a unhealthy mindset. Come on, give me an exit. Probably feel like I've missed my first one. Now I'm trying to like wait out for a better one, but oh, she's taking her sweet time. Oh man, this is a disaster pullback. Come on, go, 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 go. It's so disappointing, guys. I gave away so much profit on that trade. Oh, feel stupid. I got so stubborn. I didn't want to close it here at 140. Instead, I closed it for 300. Ah. I mean, it happens, guys. I mean, honestly, I was looking for a profit target. It would have been like 77. Would have been like 77. And I was looking for 77 because that would have been a 2K win. So I was up about $1,900, closed for a little bit over 300. So I gave away 1,600, right? 1,600 bucks of unrealized profit. The whole way down, I was looking for an exit. And I just didn't have the courage. I had the hopium. Ah. That's frustrating. Just purely self-inflicted. Yeah, Chris. I mean, like I just said, man, the whole move down. I was looking for an exit. I just didn't have the courage to get out. Fuck, guys, don't make me beat a dead horse. Guys, the rules are very simple for my trading, right? It's I'm looking for three things post entry to keep holding, right? If I don't get those three things, I'm looking to get out. So it's the same thing each time, right? Like, don't understand where this confusion comes from because the technique is super consistent, right? We do the same thing. The videos are there to show you those examples, right? The trades are there to show you how we play them out. Right? So we do the same thing every single time. So it shouldn't be confusing so that we can make those good decisions. You got to watch those videos, team, right? It's from the Start Here channel. It's called Advanced Risk Management. Like this was the candle that I should have gone out on, right? This is the one that told me my thesis was no longer correct. Worst case scenario, I should have closed here at 140. right? Worst case, best case scenario, I should have closed right at 150. But it's the same set of protocols each and every single time. And today, now, because I didn't follow that process, right? Because I didn't close where I probably should have. Okay, I know what part of my trade went wrong. I know what I need to fix. I know what I need to focus on here for tomorrow. So it is the consistency in the approach on a trade to trade basis that allows me to see right where I'm going wrong and what I need to fix. So if we can't see that consistency by now, guys, we got to do a little bit better preparation because it's the same thing every single time. We talk about the same things on every single trade. We go through the same protocols on every single entry and exit. You got to be able to start to notice those patterns, right? Because that's ultimately what's going to build you that confidence. Yes, very frustrating trade here. I'm annoyed I got greedy and didn't take it out and didn't listen to my gut, right? When I was feeling like price was a bit extended. But I also know that the reason why I chose to basically get that hopium, right? Or that getting that hopium, right, was the reason why I was willing to be a little bit opaque. So now I know I have a very simple fix for that next time, right? Okay, I need to protect myself from myself here a little bit better. And I need to maybe either put a hard stop loss, right, at that Alamo line, which I think was 156. Or I need to be more aggressive in taking profit off, right, and not getting attached to the number. Like my P&L was 19,960 at its peak, 2 ticks away or 2 points away from that $2,000 that I was looking for. So got pot committed to the number. That created hopium, right, which made me ignore my exit rule. So the getting out of the trade where I did was a symptom of a problem that was exaggerated, right, by something else. And the only reason I can figure out that loop so easily is because the technique is the same thing every single time. Oh, no, I just closed at like the worst possible price, right? Pretty much. And I know you guys aren't criticizing my trades, right? I don't view it from that perspective. But we got to be able to understand the logic behind them because that's honestly like what I'm focusing on all day, right? And yeah, literally like close the exact worst price would have been now, back to where I should have been or where my original close should have been. So again, it just shows, right? Trades love to reverse at the point where you're at max pain. And when you create that max pain for yourself, right, you're always going to get punished for it. Sometimes the markets turn us into Paul Giamatti, right, from Billions. And we just craved the suffering on that trade. And I say it in that way, right? Because the second that I transition from being a technical based decision trader, right, to being an emotional based decision trader, which is looking at P&L, which is the hopium feeling, right, that I described. The second you're in that place, right, the decisions you make are irrational. So it's understanding, okay, that was my trigger that got me to that point where I was irrational. how can I make sure I protect myself from experiencing that triggering event here again? And I don't think it was specifically the number, right? The 2000 wasn't necessarily the number, but it was that I got fixated and chose my profit target based off of hitting a number, not based off of a technical reason to exit or enter a trade. All right, so that 176 number wasn't a technical target, right? It was an emotional target. And then that ruined, right, effectively every other element there of my technical analysis. And again, I want to repeat, right? Because my process is consistent, because I judge my trades with the same criteria each time, when I see those gaps, well, I can clearly see here, okay, yeah, I was getting an exit signal, right? Okay, yeah, here I was getting an exit signal. Okay, yeah, here I was getting an exit signal, right? So I can see that. And I can now also explain, right, why I didn't listen to him, because that process is clear and obvious. So if I'm not able to make my technique consistent and I'm not able to get that order of operations correct, then my psychological puzzle is going to be super messy and I'm never going to figure it out, right? That makes sense, Dean, right? You understand why I care about that consistency so much and that understanding? Does that please make sense? Like, it's fine, right? We're going to make mistakes. Like, it's a part of this. And I'm going to make mistakes too. I'm going to make a lot of them over the course of my career. I signed off my email yesterday, right? Like, if this idiot can do it, anyone can. So yeah, of course, right? Like, trading is effectively a game where we're constantly just trying to find ways to avoid our self-sabotage. And the most obvious or most common form of self-sabotage, right, is getting P&L focused and thinking about that too much, and then allowing that, right, to influence your decisions. At least getting too P&L focused on a trade to trade basis. So it's really important, right, from that context then. Oh, don't apologize. It's the best thing that ever happened to me. You like, do you know how lucky I feel that I went through that at a young age? Cheat code, man. But the reason why guys like stressing or understanding that those like triggers over why we're willing to stay in trades. A, it's not complicated. B, it's the same thing every single time. And C, right, it helps you notice your pattern so that when you make mistakes, you don't have to sit on them all day. Like, I know I'm kind of been a bit of a grumpy prick here for the last 10 minutes, but like I'm getting that out of the system, for lack of a better term. I'm gonna go enjoy myself because I've analyzed my mistake. I figured out what I did wrong. I know what I need to fix. And it's just like, oh man, like why did I do that? There's like a little bit of regret, whatever you want to call it, but if you learn from it, you take something from it, you move on, you clear your head, you'll be fine. And that's all it is, right? Make it easy for you to learn, make it easy for you to study your trading, make it easy to do something repeatable. And these patterns or these mistakes stand out like crazy. And yeah, I would much rather be up $1,900 on the day here. All right, but let go, let Powell. And now, right, because I know I made like a little bit of an emotional mistake here today. And I kind of went into the day maybe feeling like emotionally heavy, right? After like this week. And I'm not pressing right any further. So like if a trade comes together, if something comes together, I'm not going to take it because I know that my most likely course of action here, right, is to maybe not most likely course of action, but I know that the risk of then trying to like get back to that $2,000 day or that $1,900 day or whatever it is, like the second the trade stops behaving right the way that I expect, or if it doesn't go well or something along those lines, then I know my impulse is going to be to want to trade the number, not to trade the process, because I already have evidence of wanting to do that here today. So the move instead, right, is to protect yourself, be proactive, and yeah, take your $300 on the chin and move on. Yeah, getting in at 25, seeing it run all the way up to 75, and not taking any profit higher than 34 or 33. It feels stupid, but yeah, I've looked dumb in here before. I'll look dumb in here again. Part of just the game sometimes. How's everyone feeling today? Besides me, everyone feeling good? I think most of you guys absolutely outperformed me here today. No, Carter, I don't really close partials. So basically, whenever I track that, or last time I did, I was doing it for a while. And when I compared the P&L that I would make after 100 trades, closing just full positions at highs versus small positions, right? And then looking for bigger moves, I actually made quite a lot less than just closing my full position at once. So for at least my trading style, holding partials doesn't actually improve my P&L much. It actually hurts my P&L. even today, right? So let's say that I closed one partial at, let's say, perfect exit price 175, right? Perfect exit price. And then I closed my other contract here at 133.50, right? Which is the price I closed at. I'm making $200 more, right, than what I made here on this trade. So for me to make $500 total or $550 total, that's effectively the equivalent of me needing to make a 13 or 14 point move, or call it 15-point move. So it's really easy for me to be able to outperform that with two contracts. So there's very little value in it from that perspective. But yeah, I was doing it for a while, and it just became very obvious to me that I was leaving a lot of money on the table. And for sure, like on a trade like today, yeah, it would have been great too, but like I would have made a bit more money, or maybe then being able to close earlier, right? Whatever it is. But I'm not optimizing for a trade to trade. I'm optimizing for like what's the most likely outcome after 100 trades, not after one trade. And so that's really what I'm optimizing for. Yeah, frustrating. I mean, it's nice to be one and done for the day, but yeah, it should have been a much better day. Yeah, yeah. I mean, most red days I've had in a row here this year, I think, is 2 in a row. Like we're gonna lose and we're gonna make mistakes and we're gonna have red days, but they don't necessarily need to be long lasting. I say that now, I'm about to probably just talk myself into a 3-month losing streak, but like that's really it, right? Like if we're really focusing on our position sizing, we're really focusing on our risk management, and we're really focusing on closing as our P&L is increasing, basically the opposite of how I closed my trade here today, then we're going to be able to survive a lot of things, because the risk reward that we trade on ideas, right, is like, as a starting point, 1.35, right? So for every dollar that we're risking, we're trying to make an implied $3.5. Generally, right, it's even better than that. Like on today's entry, we probably got like 1 to 7 risk reward, right, type thing. And we don't need to get massive moves then to be able to really get outsized returns. And outsized returns is relative to our risk. And so that's what allows us to win, right? We don't necessarily win because we win on 100% of our trades. We make money and we keep money in our portfolio because we lose well, all things considered. And we're able to, basically keep the math in our favor. So we're taking what would be deemed in poker terms as like a positive expected value decision. That my voice cracked weirdly there. But we have an implied win rate, let's say, of like 60%. Right, and we're targeting a 1.35 risk reward. So that means that I only need to be correct, right, on 25% of my trades, right, give or take, to be profitable. So on each decision I make that I follow my rules, I've got quite a lot of expected positive value, and it's optimizing for those trading decisions that allows me to basically play for that 100 trade sample size, right? Because there's going to be short-term variance. There's going to be times where things go in your direction, things don't go in your direction. And so giving yourself that sample size and optimizing for that big picture allows you to survive it. Okay, guys, like what I'm doing now, right, is I'm journaling my trade. I'm going through that process. I'm doing it now. I'm not giving myself a excuse to put this off, an excuse to avoid this, excuse not to do it. I want to try to journal my trade pretty much as close to my execution as I possibly can, right? Because it allows me to remember details that I would forget otherwise. All right, any questions here, team? No, I'm not going to take any more trades. I mean, it's part of the game, right? I mean, I think, yeah, I don't. I think most people uh, refuse to share that information with you online because they're actually not trading with any real pressure or like any actual psychology or anything like that. So they don't focus on it, right? They don't work on it. But most people don't have issues learning strategies or learning techniques. They have issues learning how to manage their psychology and how to manage their risk management. And no one is willing to be. I'll phrase that differently. I would say most traders online, right? They almost want to like portray that they're bigger and better than God. Like they never lose. They are perfect. They're you know, like they kind of give off that like Instagram lifestyle vibe. And it seems so disingenuous and so bullshit. And I don't know how people who learn from these guys actually make any money. Yeah, seriously. Don't get me wrong. Like, I live a pretty good lifestyle and I live a very comfortable life, but uh, just like sharing that with you guys and like bragging about it and flexing my stuff on you, like what that gives you nothing. Like, it doesn't make you a better trader. It doesn't help you improve. Uh, I think if your motivation in life is just so I can have more money so I can buy things, you're probably also not going to be particularly happy. So for me, the focus is always psychology, risk management, and strategy in that order. And yeah, try to show you guys what it's like. Yeah, it's stressful. Like trading the family fund and managing that and dealing with all those stressors is a little bit of extra pressure, but that's a privilege and it's something that I really enjoy. And learning how to manage those feelings and manage those emotions and sharing those experiences with you guys is yeah is extremely rewarding. And the other element of it, right, is uh I've said this before and I'll say this again, for better for worse, the way that I kind of run this stream is I just don't really have like a filter. I pretty much go like stream of consciousness when I'm in here, right? So I don't yeah, every thought that comes into my head I basically say out loud, which is like probably pretty good for here. It's like maybe a a little bit weird when I interact with people in real life. Um, but that also allows me, like, when I hear things out loud and I hear myself say it, you can sometimes remind yourself or realize like how ridiculous your thoughts are. It is very different. Yeah, of course. Yeah. I don't have $1 million at risk when I'm on a one-on-one call with you. So always a little bit more calm there, but like for me, I kind of view it as two distinct personalities, right? There's a certain like ruthless focus that you need to have when you're trading, and it kind of yeah, it demands, right? Like yeah, to be ruthless. I think that's the right term. And so that, yeah, that can make me a little bit snappy and short and whatever, but it for me, that's just how I can manage it in the one-on-one calls or when I'm speaking with people individually. I mean, I tend to be a little bit more calm. Like the way maybe this is a better way of phrasing that. So, like, the mindset that you need to be in to make money as a trader is different than the mindset you need to be in when you're learning about your trading, right? And I think that they're almost like two sides of your personality. It's harder to want to tolerate, or it's more challenging to want to tolerate learning when it's time to make money, and it's hard to tolerate making money when it's or trying to make money when it's time to learn, right? And I think both of those are important to kind of like work in unison, and you need one element of intensity supporting the other, but they're different sides of the same coin, right? So it requires a different type of focus to make money trading and to execute your strategy than it does to like study and review and to learn from your trades. And when I'm in like focus mode and ruthless mode, right, which is what I think it takes to make money while executing, I would for sure say that probably one of my flaws is that I'm not always very good at creating room there for it to be learning mode. So figuring out that balance is always something to work towards for sure. Any other questions here, team? Final call here. Final call. And Nautilus, congratulations. Sonia, it seems like you have a call booked for next Thursday, not today. You have it booked for the 24th. I appreciate you guys saying that. Yes, well, send me your trades, right? I'll be happy to take a look at them later. All right, no problems there. But yeah, you booked a call for next week. I don't know if that was by accident, but send me a message. We can always jump on something, figure something out. And look, I'll leave this with you guys, right? Um, so like when I first started trading, I worked with a guy named Steph, right? Steph was effectively my mentor. Now he was paid to do this, right? You know, he was part of the training or team at Air Rain, and his job was to teach me how to trade. So what I did is I sat beside him. I asked him every possible question I could think of, right? Then I probably annoyed the absolute living shit out of him. Truth be told, he probably freaking hated me for 6 months. And Steph was like cue ball headed 45 to 50-year-old Greek man. And yeah, kind of an intense personality. Ate just like a little bit too much tzatziki and a little bit too much garlic. And every time I would ask him a dumb question when he was stressed out, he'd always yell at me with his garlic breath. And I still kept asking him questions, and I still kept probably driving him up the fucking wall. But like 6 months later, he actually started to, I think, like me a little bit and respected me and kind of appreciated the method to my madness, because he saw that I was like trying to get better and actually taking the stuff that he was saying and using it, right, and improving in that context. And so, like, what I want to stress to you all, right, is like for sure, like I can have moments where I get a bit bitchy and where I'm frustrated, or where I'm agitated, or like where I hate myself in the moment, right, over why I made a trading decision. And yeah, I hate answering questions in those moments, right? Full transparency. I hate it because it forces me to have to be honest when I'm looking to try to give myself an excuse and to make myself feel better. Uh, and so like it's honestly like it's dumb of me to hate that and to want to run from it and to like be snappy and bitchy. It's just super uncomfortable to embrace that honesty in that moment, and to be like, yeah, I made a mistake. It feels really stupid. So I promise you, like, it's never be able to um like it's never I promise you guys, like, I'm not getting mad at you, or I'm not getting annoyed at your question. I'm not getting like frustrated. Oh, Sonia's asking me again, like, oh fuck me. Like it's never like that. It's that in those moments I kind of feel like a little bit like imposter syndrome, or like a little bit of a fraud, or however you want to describe it, because I have to explain my rules knowing I just broke them. And so it's like, oh man, like it really just really like frustrates me, because it's like, man, like I didn't do what I said I was going to do today, right? And that's a me problem. It's not a you problem. And so it just reminds me that, yeah, I didn't behave the way that I expected or the way that I should have. And then knowing I did it, but then also saying it out loud, it makes it hit a little bit harder. So it just like in that moment, right? It forces me to confront something that I'm trying to avoid for at least a few minutes. And that's where that anxiety or frustration comes from. Again, that's why I do it. Yeah, of course, ask your questions, guys. I don't want you to ever feel like you can't ask them. I want you to ask every question that comes to your mind. And again, right? Try to drive me up the wall. Like the times where I get mad or I get frustrated, it's because I've done something I shouldn't have done before your question, and I've made a mistake. Right. And then effectively, it's like you've noticed that I've made a mistake and you're looking for clarity on it. And then I have to admit it. Right. Like that's where the frustration comes from. It's not from you having the question. it's from me realizing that I've been a little bit of a hypocrite. So I think, Sonia, the way that I effectively look at it is I look at it in ranges, right? So what you could do here for yourself is take a piece of paper, right? Or make a Google Doc or something along those lines, right? Something that you can visualize here all the time. And do one for ES, for NQ, and for CL, right? The three tickers that we trade. So ES moves $50 a point, right? Or $12.50 a tick. NQ, right, moves $20 a point or $5 a tick, right? And then CL moves $10 a cent, right? Per contract. So what you want to then do, right, is map out your ranges. So if I know that if I'm risking between 25 points on NQ to, let's say, 13 points, right? Then I'm risking between $500, right, and $260 per contract. So I know that if my stop loss is 14 points, it's going to be a one contract trade. If it's going to be less than 13 points, right, now I know I could potentially size up. So again, if it's 12 points now, right, that would be risking $240 a contract. And I could be purchasing two contracts, right, to be within that same range. So then between, say, like 12 and 9, right, I know I'm risking two contracts. And then between like 9 and 6, I know I'm risking three contracts. And then between 6 and whatever, I know I'm risking four. So it's basically just going through and mapping that out for yourself. And that'll give you that sort of opportunity. So on your trade, right, you had call it $200 of risk. So you should have had two contracts there, right? And you would have still been within your max loss number. So that's my recommendation to everyone, right? Map out your position sizing zones based on ranges between 25 points, right? And say 0. And then figure out your ranges, right? Where you're going to go one contract, two contracts, three contracts, and do that for each of the tickers that you do. That'll be the fastest way to help you kind of start to do that mental math, because you don't have to then calculate, oh, it's 17 points. What do I do? It's okay. It's in this range. I know this range is one contract. I know that range is two contracts. And that'll speed up that process for you a lot more. Any other questions here, team? Again, good green day. Like, Green Day's a green day. I'm proud of all of you guys for outperforming me here today, right? Like, that's pretty much fantastic. Generally means that I've done a better job as an educator than a trader here today. So hopefully we can get that balanced out a little bit more. But obviously, very well done here, team. Yeah. So all it is, Mike, is I have an interactive broker's account, right, set up, and I am linked as a advisor for money in my dad's account, my sister's account, and yeah, so there's three accounts total linked. And so effectively it just works like a trade copier inside in interactive brokers. So they have classified me to be able to trade under their behalf or on their account. And that's what I do. It used to be structured in a little bit of a different way, but I ended up getting audited by the CRA and ended up closing that structure and making things a little bit smoother. It was a huge pain in the ass. Uh, when you do your eval, are we doing it with you on live stream as well? Well, I don't have any evals at the moment. I'm in just fully funded accounts. So I'm guessing when you're saying when you're doing your eval, yeah, for sure, right? I think the vast majority of people in here are taking the same trades as me. It would be kind of weird for me to show you guys all my streams and to show you all my trades, and then hey, it's eval time. Go do it by yourself in a dark room. So yeah, I mean, you choose what trades you want to take. No one's going to put a gun to your head and force you to only take them, but I think that's a big part of it for sure. Um, I don't know if there's like a preferred or more common way. My recommendation would be to do ACH because PayPal charges fees and they'll take 2%. So I wouldn't necessarily want to go that route. Personally, the way that I do it is I take it into my business bank account. I take payouts there, and then I pay myself a salary from my business, which is both DTR and prop firm income. I have Bergs, but I prefer just getting direct wire transfers. Like I have a US based bank account, right? So it's pretty easy in that context. Yeah, with my LLC. So I've yeah, I mean we're trying to get a little bit complicated here, but yeah, my business income is split up. So for Americans, it's to an American bank account. For people who are outside of the US, so mostly Canadians, I have a Canadian incorporation too. Anyway, we're getting into the weeds here. I'm not the right person to talk about tax strategy. It's not my edge. I hire someone to do that for me. Oh yeah, Sonia. I mean, I bike now more for fitness than ego. So most of my bike rides are uphill, not down, or most of my time on bike is uphill, not down. So it's more exercise than thrills. The thrills are uh bumping up the seeing views. Like that's the thrill. I trade 150s. Ryan, all of my accounts are 150s. And honestly, just purely out of convenience. So having just like not having to change up my position sizing or my risk rules per each account. Like it just keeps things so much clearer in my head. So that's pretty nice. And then it kind of allows me a little bit, right, to be able to do comparisons between prop firms, and be able to kind of look at, okay, which one has the most slippage, which one has phantom stop losses, which one does this, which one does that. So it keeps things a little bit more consistent. Um, a favorite, I don't know if I have one. Like the one I've been paid out the most from is Top Step for sure. Um, so like that's probably my favorite just from that perspective because they've paid me the most amount of money out of anyone. Um, but Top Step is also kind of given like some pseudo red flags, because they're going all internal programs instead of using Trade-Evate or Rhythmic or Sierra charts. They're building out everything internally, which is fine, but I rather have options or flexibility. So no particular issues there. Um, really like just like from a general statement, the biggest red flag these days is just like I think the live sim to funded accounts. I think that those are probably the biggest kind of like uh bullshit fugazi uh concerning ones because they really force you to not be able to make any money because of their consistency rules. So for me, yeah, pretty much anywhere where there's a consistency rule based on your payouts, I think it's a little bit of a trap because it punishes you for having big green days instead of rewarding you for that. And so it kind of skews, or like that's a way of prop firms kind of skewing their ways of being able or having to pay out after big red or big green days. Um, so yeah, I don't like consistency rules. Like if there's like a 20% consistency rule, like I think that's like a huge red flag. If it's like a 50% one or 40%, okay, no big deal. But if it's like 20%, 15%, that starts to become pretty concerning. So that for me would be it. And then I would always prefer prop firms that offer an end of day drawdown balance, not a high watermark intraday. So those would be really the two things that I care about. And then obviously the thing to look out for is if people or if prop firms basically stop paying out normal people and only keep paying out influencers, right? People that are on their payroll. Um, not to say that this happens a lot. It's impossible to tell, but about a year and a half ago, a prop firm was sued by some of it's like ex-employers or something along those lines. And one of the allegations that they made inside that lawsuit was that they weren't actually paying out as much as they were saying. They were just giving fake payout certificates to influencers, to make it look as if business was booming. And uh, catching something along those lines, right, would be pretty much as big of a red flag as one could find. All right. Anything else? Like your just to go on this, right? Like your risk with prop firms is basically CEO risk, right? So how scummy is the CEO? So when you're picking a prop firm, that's basically it. I mean, this time last summer, I can't remember what the company was called, but they were like the first ones to do the sim to funded, and they did like no payout restrictions and no consistency rule and stuff like that. And then they ended up doing a rug pull like 8 months later for a couple $100 million. So generally, if it's too good to be true and the CEO is like posting pictures of watches and Lambos and lifestyle, um, probably would avoid them at all costs. But that's why you diversify among multiple companies. I don't think Top Step or My Funded Futures or Tradeify or Take Profit Trader are particularly in that rug pull category. They're established, they've been successful, they've got a long track record. So those would be my priorities for sure. But if you're going to risk and you're taking a gamble on a new company or a crazy offer, those are the red flags to look out for. All right, guys, final call for like the fourth time here. All right, guys. Well, no further questions. I'm going to kill the stream here for the day. Sandy, like always, right? If you have any questions, hit me up outside of market hours, and I'll do my best to get back to you as soon as I can. Expect a recap here coming pretty soon, and hopefully we can get ourselves a nice little end to the week there tomorrow. Have yourselves a great day, team, and I'll see you then.